things really, like the 3 T's, like the old 3 T's were the tenants, termites, and toilets. The new 3 T's is trust, teamwork, and track record.
Mm-hmm.
So, you need to have a level of trust with this operator, and that can only be learned. I mean, you have to meet them. I like to meet people in person, do a gut check, see if they seem like a genuine person. Um, and of course, that also goes over time. What have they
Mm.
done in the past with their track record? While plenty of new operators are genuine people and they seem very nice, if they haven't proven really anything, it's hard for me to put my money with them or recommend putting anyone else's money with them. I
Mm.
do kind of have a rule where I invest with the operator first. And that
Mm.
can sometimes delay bringing in other investors because I want to make sure that they're up to par, and if it's my money, and something happens and that's okay, it's not okay, but better than if I have a whole bunch of investors' money
Mm-hmm.
and things go wrong. I want to know, how is their communication? Are they getting their outdates out in a regular fashion, and do they keep the investors informed, and how is their communication formatting? Like, are they nice looking, or is it just kind of on a Word document, that sort of
Mm.
thing? And then of course their team that they have, whether the property manager, if they have a couple of KPs, what are their different roles, making sure that they all have good experience.
Mm.
And of course, property management is key. You can have a fabulous deal in a fabulous location, but if the property manager is not great, then unfortunately it may not work out.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth of Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Vanessa Peters. Vanessa is the founder of VMD Investing. Vanessa has been investing in real estate for 10 years in single-family homes, commercial retail, apartment communities, self-storage, manufacturing, home parks. She has invested in over 2,500 units across 5 properties in 3 funds. Vanessa, thank you so much for joining us on the show, and how you doing?
Thank you. I'm doing great today.
I look forward to the discussion. Like I said, you have a very interesting background. But before we kind of got to get a little bit deeper, if you mind talking to the audience, kind of talk about your background and how you got started in real estate.
Yeah, absolutely. I I'm originally from Canada and moved down here after residency. So I'm a medical doctor and moved down here straight out of residency to work in a medical group here in northern San Diego County, and I've been at the same job ever since. So that was 17 years ago. I continue to be a full-time family physician, very busy. I also am the medical director for the group, so do a lot of administrative work too. So in terms of real estate, that is something that I started about 10 or 11 years ago. Right around the downturn, I had some extra cash and a realtor recommended I purchase a single family home. And at the time, I said, okay, cool, sounds good. I didn't know much about real estate. I bought a couple places and then forgot about them. I got busy, I had a child, and real estate was really not on my mind. Unfortunately, these were trouble-free homes. And they were bringing in some income, but I was more focused on my career. And after about 8 years, I started thinking, gosh, this is going really well. And I checked the values and they were double. And I thought, this is so cool. I want to get back into real estate and
Mm-hmm.
do more of it. I had also invested in some syndications through my financial advisor back in 2012, 2013. And so I didn't know they were syndications at the time, but that's what they were. They were triple net retail. And they were doing just okay because they weren't leveraged, so I wasn't too happy with those. When I saw that the single family homes were doing so well, I got pretty excited about it, and I was committed to buying more real estate. And I like to be close to the homes I purchase, so I wanted to purchase in our area, Riverside County, San Diego County. Looked around for a few weeks, and that was the end of that. There was no way
Mm-hmm.
I could find anything that cash flowed locally for me. So I was still quite determined because I've always really loved real estate. So I kept looking, going to meetups. I found bigger pockets and really took out a stack of books from the library and just kind of devoured them all. That's kind of my nature, is to dig really deep into something when I get interested and passionate about it. I Going to meetups, I heard a lot of people talking about uh, out-of-state investing. So I'm like,
Hmm.
what is that? Oh, okay. So everyone's going to Kansas City or South Carolina or Florida or Texas, buying homes. And you can get these things called turnkey properties. And so I looked into that thinking, well, maybe that's what everybody seems to be doing. Maybe I want to do that. But I had this level of discomfort with owning an actual house that I couldn't really control. I didn't know anybody in
Hmm.
these places. If I had some family or close friends, that would have been different, but I didn't. So I passed on that. Getting kind of frustrated now, thinking, what am I going to do? I really would love to get into something, especially some small multifamilies. Um, then on Bigger Pockets, I was browsing and heard syndications, and I said to myself, what the heck is that? I ignored it for a while, but it kept popping up. Eventually I clicked on a few people that were prominent, seemed to be knowledgeable. I called a couple, and I was like, a light bulb went off when they told me who can invest, the
Hmm.
accredited investor. I'm like, check. Okay. The returns, what? I was kind of skeptical at first. And so once I got a look at a apartment complex in Dallas, I was like, okay, I'm in. I went out, I visited it, I met the operator, did a background check, and because I really was kind of suspicious that this just wasn't
Hmm.
for real. How could I get 15 to 20% return on my money on something I don't even have to do any work?
Hmm.
And when I realized it was for real, I was just all in. I was like, okay, I'm taking money out of my 401k, and I'm rolling stuff over. I'm investing all the cash I had. So that's how I got to so many units, is that I've invested a ton of.
Wow.
I still have diversification, but I am definitely leaning heavily towards real estate. Once once I really got so excited about this, I couldn't stop talking about it. And people around me, my colleagues and friends were like, what are you doing? And I was so excited about it, I decided to make a business out of it. So I'm helping operators, in various ways, but helping to bring in investors and being the
Mm.
investor liaison and teaching and educating other accredited investors about these opportunities for them that we're just not taught. We think we put our money in the 401k and let it just sit there until we retire and everything is going to be great. Well, especially for high earners, we need tax shelters.
Right.
We've got this extra cash laying around. We don't know what to do with it, and putting it into sketchy things, or just leaving it in a money market account. It's just there's good options out there, but a lot of people don't understand what syndications are or how they work, and if they're for real, because especially if they're a regulation 506B, you have to know somebody, and
Hmm.
that's why you're not seeing it plastered all over the internet. So
Mm.
yeah, so that's where I'm at now, having a lot of fun with it.
Yeah, I love your transition. Just kind of like it went from like this curiosity, and you went kind of like full in as far as like getting educated, speaking to some of the operators, flying down there, seeing the properties, kind of getting really more familiar with it until you was able to kind of take that dive and to go in there, and especially at so many units and level. And then you being a doctor, of course, you're very passionate. You've done a tremendous amount of years doing it, and now relate to other working professionals that are doing it and probably don't want to leave their job. Maybe they love it, or they're just tied to it in some way, but able to diversify and just be able to build their 401k or just build wealth through real estate investing. So that's awesome. As far as kind of like your business model, are you kind of focused now on eventually becoming a full sponsor, or you still wanted to kind of build up your business by JVing with other sponsors and bringing your capital as long as other passive investors capital as well?
Yeah, great question. I think that eventually I would love to be a key principal or a sponsor. At this point in time, I don't have the experience or the time, and I wouldn't buy a building that I was sponsoring because I can't be out there hunting down deals. That's not my skill set at this point. But I would love the idea of partnering up with a few people and becoming one of the few key principals on deals. At this time, I'm trying to diversify in terms of the different asset classes, the different operators, so that I can give a great selection to my investors.
Yeah, I like that approach a lot because that's kind of way my thing was when me as being a broker and entrepreneur and business owner. It's just sometimes you don't have the time to go and fly and buy these properties and do all the due diligence. It takes a lot of work to actually do it. And then you being in a position that you love, being a physician, that it's kind of tough to make that transition, but you're still able to make it work, have your money work for you, and then kind of expand it and eventually have it change down the line once you get a little bit more deeper involved. Are you considering to diversify even more? Are you more heavily leaning on multifamily? Are you looking at like self-storage, mobile home parks and so? I know you invested in the past, but is that something that you're looking to expand on?
Yeah, I have a lot of multifamily right now, and the market is getting pretty hot, and so looking at more mobile homes and more self-storage to try and balance it out. I'm also open to assisted living. I really like the idea of assisted living, especially being a physician. I have tons of patients who live in these places,
Mm,
I've also looked at boarding care. They're smaller homes, maybe a little too much work for me right now. And I'm not I would also look into the retail as well, commercial
mm,
retail. So,
mm. Can you kind of talk us through your process since you've been doing so many of these deals of the process of vetting sponsors to see if this was be a good fit for you and your investors, and maybe that'd be a real good education process for people that are in your position to find out how you did it and how are you able to get into some of these deals.
yeah, sure, absolutely. Um, the biggest thing with the operator is the team. So it's teamwork and track record.
Hmm.
So you need to have a level of trust with this operator, and that can only be learned. I mean, you have to meet them. I like to meet people in person, do a gut check, see if they seem like a genuine person. Um, and of course, that also goes over time. So what have they
Mm,
done in the past with their track record? While plenty of new operators are genuine people and they seem very nice, if they haven't proven really anything, it's hard for me to put my money with them or recommend putting anyone else's money with them. I
mm,
do kind of have a rule where I invest with the operator first, and that
mm,
can sometimes delay bringing in other investors because I want to make sure that they're up to par, and if it's my money, and something happens, and that's okay, it's not okay, but better than if I have a whole bunch of investors' money and
mhm,
things go wrong. I want to know, how is their communication? Are they getting their outdates out in a regular fashion, and do they keep the investors informed, and how is their communication formatting? Like, are they nice looking, or is it just kind of on a Word document, that sort of
mm,
thing? And then of course their team that they have, whether the property manager, if they have a couple KPs, what are their different roles, making sure that they all have good experience.
mm,
And of course, property management is key. You can have a fabulous deal in a fabulous location, but if the property manager is not great, then unfortunately it may not work out.
mm,
So yeah, track record, trust, and the team. And then of course the numbers come last. You really need to make sure that you have all those things in place before you get sucked in by the IRR of 22%, and just jump for it without really doing your background research, without doing your due diligence on the team.
absolutely. Oh yeah, those are awesome tips. And as far as kind of like the markets that you're in, we mentioned like Texas and South Carolina and stuff. Where are you currently invested in? What are the markets that you like and some of the characteristics that attracted you there?
Well, a lot in Texas. I have some properties in Austin and Dallas, heavy in Dallas.
Mm,
Recently, Florida, and then some in the Southeast. A self-storage fund I'm in has several properties in the Southeast, Tennessee and Alabama and Florida. I don't actually have anything in South Carolina. I just noticed that other people were investing there. Um, and then Phoenix. So I have several properties in Phoenix, and I really like Phoenix right now. I I'm looking at some places more northerly, but it seems like it's a little bit easier to live in the South. I know, because I came from Canada, and that's why I'm here, is for the weather. When you purchase places in Ohio, for example, you've got snow to deal with. You've got more upkeep and things like that you have to watch out for. So I'm looking for a tertiary market. Not a tiny place. Some place that has lots of incoming jobs with incoming folks. So that's the main things we look for: the demographics of the place, make sure it's growing, make sure it has jobs. If there's headquarters moving there, that's awesome. That's why we like Dallas Fort Worth so much, is because there's tons of headquarters moving there, and is there projected to be growth in the area? So you can find all those things on demographics, trends, and the places that we invest in are usually in the top 10 of all those things.
Mm. Yeah, I like your whole process on how you kind of analyze a sponsor, and then kind of, of course, look at the market and make sure all the characteristics are there. And then when you kind of talk to potential investors and things like that, is it people that are kind of in your field, busy professionals? What's kind of like a best fit? Since, I mean, obviously you're kind of the perfect example of that, but what's kind of like the ideal fit that works best for you for the deals that you're looking to target them in?
Yeah, I'm looking for busy professionals or entrepreneurs who like the idea of real estate but don't like the actual doing of real estate.
Mhm.
That's the perfect person for me. I found when I was going to meetups locally here in San Diego, tons of active investors, tons of young kids, and they don't have any money, they want to get going, and that's awesome. But those aren't my target audience. We had a recent conference with Passive Income MD up in LA a couple weeks ago, and I attended that, and it was like amazing. There was like 350 doctors in there, and most of them didn't have a clue about actually doing real estate, but they were interested in it. So that was my perfect target audience right there.
Mm.
Yeah.
Yeah, it's just interesting. Yeah, just like I said, you being a doctor, I can imagine it's a lot of people who, very passionate about what they do and just want to kind of make sure things work. And sometimes when you think about it, like when you talk about apartments and self-storage, it seems like, well, it's real estate, people know about it, but people really don't know. And it's great that you're putting that information out there, and they have these conferences just to, make sure to let people know that these opportunities do exist, and you can be able to kind of make your money work for you. So that's awesome.
Yeah.
You also mentioned a book that you have coming out, which, like I said, love the title of it. Want you to see if you can tell us about it and what people can learn from it.
Yeah, absolutely. Yeah, it's called The Busy Professional's Guide to Passive Real Estate Investing. So pretty self-explanatory. And the tagline is a physician's path to building wealth, creating financial freedom, and leaving a legacy. So basically, the book is to really educate folks about what is passive real estate investing and what is not. That's how it starts, because a lot of folks think that buying a single family home is passive. And
Hmm.
if anybody who's done it knows that it's really not. It takes a lot of work. And depending on the issues that you might have, tenants checking up on it, paying taxes, all these other things that you need to do. But if you want truly passive real estate investing, and get passive income. So really the key is, well, why are you doing this? Do you just need somewhere to put your money? But what is your big why? And for many busy professionals, they have kind of golden handcuffs, which, to me means they've got this great high paying job, but they're chained to it. They're chained to it
Hmm.
usually because they've have a combination of lifestyle creep, where they've got their kids at private school and they bought a big McMansion and they have nice cars, and they maybe even have some debt and student loans and other things. So you have a good paying job, but you spend a lot of it too. And so, I propose, maybe cut back those expenses, cut back that fancy stuff until you have passive income. If you
Hmm.
can start investing, I mean, I would love to target the younger doctors, the younger professionals when they first get out of school, and start investing early. I mean, I'm in my 40s. If I had done this 10, 15 years ago, I would be, light years ahead of where I am right now. Of course, it depends on the markets, but that's the beauty of this type of investing, is that it really is recession resistant. We're
Hmm.
not we're not going to lose our shirt if another horrible recession occurs, like occurred in 2008, 2010.
Mm. Yeah, beautiful. Um, you being a doctor, you running the business, what's kind of like a typical work day for you? And do you have any special morning routines?
Yeah, actually, I am a big fan of The Miracle Morning by Hal Elrod. Have you heard of that?
Oh yeah, many
Yeah.
times.
Yeah.
Great
So,
book.
yeah, I love Hal. And that actually he really helped push me on my entrepreneurial journey, because we can get stuck in our ruts, get stuck in our bubbles, where we just kind of see the same people, talk to the same people, do the same thing every day. But after reading his book a couple of years ago, it really got me open and thinking about all the possibilities. Getting up early, and I try and do some meditation every morning, um, and then do a little bit of journaling. I always listen to audiobooks when I'm getting ready in the morning and driving to work, and visualizing your future. What do you want it to look like? Keeping your eyes on the the prize per se, but also understanding that if you don't have a goal, then you're just on this hamster wheel all your life. And then what is it really at the end that you're going for?
Mm-hmm.
Is it just to accumulate a whole bunch of stuff that you can't take with you, or is it to really have some experiences? And trading time for money is really what I'm working on. Is that currently all physicians, most professionals are trading time for money. And so if we can kind of uncouple that, break that equation so that you have money coming in that's separate, that gives you that freedom that you can take some time off, do something else, and not feel that pressure. So, sorry, getting back to the morning routine. I'm not so good with the exercise. I do that on the weekends, but I do love to get up early, meditate, and scribe in the morning.
Beautiful.
And a typical day for me, I'm at the office by 7:45 and see patients through most mornings and some afternoons, and then I have administrative duties, lots of meetings and stuff like that. I really try to get home by 5:30 so I can be with my family and try not to touch work, for the evening.
Like that a lot. And with all the success you had, and like I said, with your practice and real estate investing, can you say what contributed to that, and what are you most grateful for?
I'm really grateful for the opportunities actually that through Hal. I went to, he has an annual conference called Best Year Ever Experience, and I went to that, and I met some amazing people, joined a mastermind. I didn't even know what a mastermind was, and met so many cool people that have really shown me what is possible. Like this book happened because I joined a mastermind. When you're around people who are doing amazing things, then you start doing amazing things too, and get spurred on by other folks and have accountability partners and things like that. So I'm really grateful to my mastermind group right now.
I like that a lot. So how do we get in touch with you? And also, can you let us know what the name of the book is? And of course, I said you think it's coming out soon, or just let us know what that is and how we can get in touch with you.
Oh, absolutely. Yeah, you can email me directly at vanessa@vmdinvesting.com, or visit my website, vmdinvesting.com, and just click on the contact link. And the book is called The Busy Professional's Guide to Passive Real Estate Investing, and I should have it up for purchase in early January. And if you email me, I can also send you a free link to it's basically an investing analyzer, where if you can plug in amounts that you'd like to invest per year, and if you reinvest all the profits, where you will be in 5, 10, 20 years. It's pretty amazing.
That's very useful. Yeah, absolutely.
If you put in like say $100,000 a year for 10 years, in 15 years, you have like, I don't know, $13 million or something. So it's just a fun spreadsheet tool that I have, and I'd be happy to send that out.
Awesome. Well, yeah, we'll make sure to have that in the show notes. And like I said, it was great kind of talk about your journey and your activities with your business. And like I said, we appreciate all the tips and things that you afforded to us. So we appreciate that again. I look forward to connecting you again soon, and have a great week.
Okay, thanks.
All right, take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.